Welcome to I Call Bullshit Property Podcast, where we separate real estate fact from fiction. I'm Reece, and in every episode we uncover the truth behind the property market's biggest claims and biggest trends. Joining me is our resident expert, Lachlan Delahunty. He's seen it all and isn't afraid to call out the bullshit when he sees it. Welcome, Lachlan.
That's a good start. Straight off the bat, round one, he's just hit that out of the park. Good to be here, Reece.
Yeah, we did a lot of preparation for this podcast, so it was quite easy to pull that off. Let's jump into it. First topic, Lachlan. Perth buying cycle has finished. Before I start unpacking it, let's just read out a couple of articles. APR, slowing Perth, Brisbane housing markets boost affordability hopes. Australian property investor, is Perth property now unaffordable? And then on the other side, Australian property update, Perth property boom shows no sign of slowing in 2025. So Lachlan, how do we know when a market is finished?
That's a good point. So looking at the fundamentals, Reece, how would you try to understand when a market's capped out from an affordability point of view or when it's finished its cycle? What would you look at?
Yeah, I think from my perspective and not a professional perspective, you'd see stagnation, house prices, you'd see high vacancy rates, you would see, entry-level people struggling to get into the market. I'm not sure how you see it.
That's exactly those things you mentioned. So best is look back, using Perth as a localised area to understand what the market looked like when it started to slow down. And, for people listening who are Perth-based, that wasn't too long ago. We're talking 2013, 14, and then it got really dire in sort of 16, 17. And the key to the metrics that you track, it's driven a lot by population growth. So that's the first thing, because that's all about demand. People moving into a state from overseas or interstate puts immediate pressures on house prices. So, we look at what happened in that period of slowdown. We saw net interstate migration in the negatives. Typically 15 to 20,000 people were leaving Perth year on year to, for work opportunities elsewhere, particularly on the East Coast. So, in this particular time now, it's actually the opposite. We're receiving 15 to 20,000. So that's a really big indicator. You also start to see, rents is one of the first things to go in any market. So we track this when we want to enter markets. If we start to see vacancy rates come off and we start to see rents rising, that's typically the first, sign that the market's starting to show value and opportunity. So in contrast to that, what we'd be looking to see a market that's starting to stagnate or potentially come to its conclusion in cycle is that rents are starting to fall and vacancy rates are starting to rise. So looking in that in isolation at the moment, are we seeing that in the Perth at the moment? What do you think? What are you seeing on the ground?
Well, I mean, from what we're hearing, no. I think it's still tough market to get in, especially in that entry level stock from a property standpoint. Rentals as well. I think definitely seems like there's more opportunity out there.
There is, but the vacancy rate's still well and truly below sub 1%, right? So it's
and I think you raise a good point on the migration data as well. I mean, I myself left the country 10 years ago and was probably one of the statistics that were driving away that net interstate or net overseas migration. But coming back to Perth in the last 6 months, it does see that people are starting to see it as a viable lifestyle choice. And it's not just Perth. I think that applies to your Adelaides of the world, Brisbane to a certain extent as well. But it definitely feels like, that lifestyle post-COVID, it is, it's not the mining industry that's just driving everyone here. It is, a lifestyle choice as well, I think. And that's one of the big things I've noticed just since returning back to Perth.
Definitely, and I get asked that on a daily basis. Is Perth, solely reliant on mining, and therefore what's happening with China and our mate Donald Trump causing chaos? Is that going to have a huge impact here locally? The difference in this, boom, if you want to call it, don't like using that term, but people are calling this a boom in property prices compared to our previous boom, is that was solely driven by mining-related industries employing people overseas and interstate. This is slightly different. Perth's a little bit of a different, platform now. We've got a lot of diverse range of employment. The construction industry, tourism, mining-related still plays a big part, but it's not solely reliant on it as it once was. So looking at that, when you look at population growth, you could, we're certainly on the demand side of the scale. People are still moving here, so we've got to consider that. And, the supply side of the equation, the lowest stock on market, still sub 5,000 properties on the market. Vacancy rates, a balanced market's typically about 2.5%, 3%. We're at 0.6%, so very undersupplied from that front. And then, the next thing is affordability. The median house price now above 800,000.
And that's the big thing we're hearing at the moment. Like, is Perth now, reference those first two articles I mentioned at the start of the podcast, but, is Perth now unaffordable?
Yeah, and on the ground, it probably feels that way.
Yep.
People fail to understand that Perth incomes are the highest in the country, with the exception of Canberra. Government jobs, cushy jobs, and they get paid the big bucks. But here in Perth, we get paid extremely well in comparison to New South Wales and Victoria, yet our house prices are still relatively cheap in comparison. So our affordability index at the moment, which for those punters at home are trying to work out what that is, it's the average wage consumed by the average mortgage. So how much out of your pocket every year is going to your mortgage, and it's at 46%.
So I mean, on that kind of frame of mind, then, do you think people that perceive it to be unaffordable, they used to having a big surplus of cash each month because their mortgage payment was this, but actually, when you look at maybe other states or cities, we actually, we had a bit of room to go, and this is probably more norm from an affordability standpoint. Yep,
good question. So when we fast back 4 or 5 years ago, our affordability was about 30%, and that became the norm, right? A third of my wage or a bit under is going to pay the mortgage. I'm comfortable with that. Now it's 10 to 15% above that. It starts to get, okay, is this sustainable? But to give you context, around the country, Sydney's currently at 92%. So
that's ridiculous.
Yeah, their price to income ratio is at 14 times. So that's an extreme, right? I'm not trying to ever compare us to Sydney, but if we look at even say Brisbane's currently at 54%. So we're still well and truly far more affordable than that market. And looking back in Perth, which is always important, in our previous growth cycle, we got to as high as 59%. So we're still an extremely long way away from that. And if you just looked at the factors that go into the affordability index, which looks at wage growth, median house prices and interest rates, if you look at the only two variables in that, and if interest rates were to stay the same, highly probable that they may be dropping later in the year, which would increase affordability, and wage growth stayed stagnant, which as we're seeing, wages are rising, but those two variables to stay stagnant, the Perth market would have to increase from today 60% to catch its previous affordability high. So does that make sense?
That makes sense. So, what you're saying is from a historical sense, and if you're comparing us to some of the other capital comparable cities, so your Brisbanes of the world, we still have a lot of room to go on an affordability standpoint and could stretch even further with the property prices where they may go this year.
Yeah, exactly. So it's easy to read headline media, and hence the purpose of the podcast. But it's more important to have a look at the facts and, taking yourself out of the market altogether and take recency bias out of it, what's happened in the last 5 years. If you purely just looked at the stats, supply and demand, as we talked about, and affordability overlaid with confidence, that's another really important factor. And confidence comes from people having jobs. We've got an abundance of them here locally in Perth. Confidence comes from media sentiment, and read the room, it's still very, very positive out there. People are still pro-property. Sentiment can come from interest rate drops, as we've seen recently. So those four things you need to always look at in isolation: supply versus demand, affordability and confidence. And every one of those metrics at the moment is positive for Perth.
And just on that, I know you touched on employment briefly there as well. How does Perth stack up versus the other capital cities in terms of job opportunities or unemployment data as well?
Yep, we're the lowest unemployment and underemployment city in the country at the moment, which is probably not surprising. So underemployment looks at people who currently have jobs but have capacity or want further employment. So it might be part-time capacity. And at the moment, we're the most employed state. So that breeds confidence when people have money and their wages are growing, and that typically comes from strong economies, but strong employment and strong workforces. Then typically that is expressed in the market through house prices.
Yep. And I guess looking at how Perth has run in this current cycle, so over the last three or 4 years, how does that compare to previous cycles? Is there anything that we can look at some of the data from 20, 30 years ago to notice some similar trends, or are we operating in a new cycle at the moment?
That's a really good point. So when I present to various banks around how markets move and contract, I always highlight where any market's been historically, because it's our best judge of what it could do during the future. And this is, again, isolating Perth. If you look at our last three growth cycles, it was, from early 90s, about 89 essentially to about 1994, property prices went up by 205%. Over a very short period, 5 to 6 years. If we then look at the mining boom, the historical mining boom of 2000 to 2006, prices went up by 215% in a 6-year period. So that's pretty extreme. We're not talking about, what we're seeing at the moment, 60 to 70% across the board. There's some evidence of markets doing less than that, evidence of markets doing higher than that. We're talking markets historically. Perth has done well over 2%, 200% in its last 2 previous cycles. So if you just looked at that in isolation, you'd say we're a long way from where we've been historically. Do I think that's going to happen and play out? We're going to do another 200% in this cycle? No. But it's looking at history would suggest that we're a long way from where we've been previously.
Nice. And do you think the mindset of either a first-time buyer or, someone looking to enter the market has shifted a little bit with Perth? I think, we're a similar age. We grew up, in Perth, that you would get a 4x2 with 600-700 square meters block of land. That was kind of what was embedded. Get into the market, timing, times everything. Get into there. But now, looking at some of the core logic data that we saw in February, Perth had an increase along with all the other capital cities, but that was driven by unit sales, actually. So the unit sales, Perth was leading the country at 1.1%. So do you think now people in Perth are starting to, see that as a new entry point rather than that sort of 4x2 house?
Yeah, exactly. And that's why the market appears unaffordable, right? Like you said, everyone in Perth, including us, is so comfortable with the idea that we're going to have a 4x2 and we're going to have a backyard and ideally a pool to enjoy the 9-month summer that we have. But in reality, that's not any other city in the world. Unit living, apartment living, higher density
share
living.
houses.
Yep, all that sort of stuff's common practice.
Yep.
You were overseas in London for how many years? And I'm sure you shacked up with 12 housemates for the most part of it, just to make to make ends meet and have some money at the end of it to buy a beer. But in Perth, less than 20% of the market is made up of that higher density. You look at Sydney, it's north of 40%. So we're a long way behind. And so that affordability piece, it is unaffordable. It is when you're looking for that 4x2 family home. I get that. But we have to look at other avenues, and that's where higher density will become more apparent in the local marketplace. And we're seeing that. And that's when you can buy sub-median. You can still buy apartments, units between that sort of $500,000 and $700,000 price point.
Yeah. And just reflecting on, some of the key fundamentals that you were mentioning earlier, in terms of dwelling approvals, that's been a bit of a buzzword in Perth over the last couple of years. It's been clearly outlined we're not building enough properties for the amount of people that are coming in and the amount of buyers that are out there. How do you see that looking in the next sort of 12, 18 months?
Yeah, so I track this religiously. So January data just came out this morning. Yep. So there was 987 dwellings approved in January. Yep. So hypothetically, you'll see that come out of the ground in 12, 18 months, based on what we're seeing at the moment, hopefully closer to 12. So that's what we're looking at to see. Another thing, we're going back to the start of the podcast, Perth historically has a history of oversupplying the market when things are going well. And that's what happened in 13 and 14. Everyone was moving from west to east, yet building approvals went through the roof. We're talking dwelling approvals, 2,500 a month. So being sub 1,000 is demonstrating we're still not approving enough homes, and that's to say that all those approvals are going to turn into completions, which typically they don't because of construction constraints, labour constraints, and those sorts of things. So we will monitor this closely, but net that out. If there's 1,000 to 1,500 approvals on an annual basis, we're talking 15 to 18,000 dwellings. That's certainly not enough to keep up with the 80,000 migration numbers that come in the last 12 months, and that's what we had. 85,000 people come in from overseas and interstate. So 85,000 doesn't go into 30, and then when you look at what the available supply is in the market, there's currently less than 5,000. So we're short circa 50,000 properties on that metric alone.
Yeah. And I guess in terms of looking into 2025, you've got ears on the ground, with multiple different asset types and areas. What's been the sentiment like at the moment as we kick off 2025?
Look, there's a huge push led from government to try to increase housing supply. There's different methods that are being tested. I think we'll see an increased supply over the next 18 months. But like I said, even if there was a significant change in policy that allowed development to take place quicker and easier, you're still 18 months from that coming out of the ground. So the short-term fundamentals for that means we're going to be undersupplied for the next 12 to 18 months. But I do think we'll start to see those building approval numbers get back up to a couple of thousand a month. That will be likely because there's a demand for it. Developers are making financial returns on that, so they're incentivized to get things out of the ground. The biggest problem is that high density space. I went to an event a few weeks ago where pretty much the consensus was, unless it's above $13,000 a square metre on the exit, developers can't make these apartment projects viable. So on a 100 square metre apartment, that's $1.4 million. That doesn't solve that affordability entry point, right? So that concerns me, and that means that we can't solve this housing shortage quickly, which for those that invest in the market and hold property is a good thing, because when there's a scarcity of properties and there's higher demand than there is supply, prices will rise. For those trying to get in, it makes it more difficult, and certainly for those that are early in their journey trying to save for a deposit, it's going to become more difficult in my eyes.
So, Lachlan, what's the verdict? Fact or fiction? Do you call bullshit?
Bullshit on what, Reece? Just rephrase the first question.
Perth buying cycle has finished. We mentioned some of the articles earlier in terms of what their thought process. You've only got to go on YouTube and type in Perth 2025 predictions and seeing all the negative connotations that the market or the cycle has done.
Yep. I call bullshit. And the reason I do is not because I'm biased, because I live here locally and we want Perth to do well. It's purely factual based. Take yourself away out of the market altogether and just look at the data. It's still the strongest market in Australia from an investment point of view. And the reason you'll see a lot of headlines, I think you'll see a lot of reels on Instagram, TikTok, YouTube, like you said, will likely be from East Coast buyers agents or investment groups that are going to have a natural bias to the East Coast because that's where they're located and their ease to transact is on the East Coast. So that doesn't surprise me. We're going to see that. We're always going to see that in various markets. But just to sole out that the Perth property cycle is topped out, I call bullshit.
Make sure to join us next episode. Stay informed, stay curious, and keep calling out the bullshit.